I remember a person that I met, or I guess I met him on telephone, and he actually called me, had an opportunity to do a $10 million contract with Crane. And he hadn't been able to get this contract because he did not have an adequate accounting system. And I told him I have that, if it's pretty turnkey, we can provide all of the accounting for them. All he had to do was just pretty much decide to do it. And he said, yes, I want to do that. I'm hiring you right now. Let's get started. I've never been hired quite that quickly. I continued to explain to him more and more about what was involved in government accounting. But he was excited because now he could qualify for this $10 million contract, and or at least to apply for it again. And as we began to talk, I realized that he thought that he only had to do government accounting on that $10 million contract. And the rest of his business, which was about a $25 million a year business, didn't have to worry about it. And I said, no, you have to have government accounting on your entire business because you have a government contract. And I got fired in the same phone call. Timekeeping. DCA auditors perform floor checks. There's penalties for labor mischarging. There are criminal charges that could be imposed against employees, supervisors, managers, and officers. So everybody along the line has to make sure that they're doing this right. I have a timekeeping system with Innovation Resources that's online that companies can use. In fact, my entire accounting system is one that people can just outsource to us. And the accounting system, or the timekeeping system is online. You just log on, pop your time into the projects that you have assigned, and it's all taken care of for you. I want to talk about the DCAA pre-award survey. The Defense Contract Auditing Agency will be requested by an agency that wants to do business with you to come out and make sure your accounting system is in good shape and ready to go. Well, what are they going to look for? They're going to look for the financial capability to perform the contract. It's not just a matter of technically being able to understand what you have to do to complete the contract, but financially, is your company sound enough to complete a federal government contract? Is the contractor's adequacy of the accounting system to accumulate the type of cost information required by the contract? So they'll be looking at that. Now this actually may be that they perform this post-award. Sometimes an agency will get real excited about having funding available, the fact that you're a company that maybe has a specialty that they're looking for, and they want to get moving right away, and they'll get through the contracting process, and they're ready to go. They've been trying to get in touch with DCAA, the DCAA is busy, and so things get rolling and things get going, and then sooner or later the DCAA catches back up to you, and they come in and they want to do a post-award financial survey, and sometimes that turns out to be a negative experience because your company's not ready. That is the worst thing that could happen, really, is that you've gotten all excited, you've gotten started, and then you find out that your accounting system isn't going to carry it for you. And either the government has to shut down the contract, or they have to postpone until you get your contract accounting in good shape, or they find some other way to do it. They're going to cover your financial statements, reports, stockholders, lending institution, cash flow forecast. Basically, your finances are an open book to them. Loan agreements, aging of accounts receivable and payables, because they're going to want to know, are you financially sound? If you're a startup company, you may not have any accounts receivables, you may not have any accounts payables. One of the things about being a startup company and getting SBIR funds is they're a lot more lenient on some of the financial aspects, because that's what they're charged to do through the SBA and the SBIR program. So I think most of you won't have trouble with the portion where you have to sort of be financially well sound before you can get started. Employee payroll tax returns. There's something that was right here in the language of the FAR in 2301. In developing their contract cost accounting systems, new companies often benefit from employing personnel or consultants who understand rules and regulations applicable to accounting for costs incurred on government contracts. I tried to get the DCAA to actually put my company's name on it. Here's what you need to have. You have to have a system that will segregate direct from indirect costs. You have to be able to accumulate direct costs by contract. And so you can't just blend everything together and sort of say, well, I spent 14% of my time on this contract, so we'll just charge 14% of all of our expenses to this contract. No. You have to accumulate the direct costs by contract. Consistent method of allocation of indirect costs. Consistency is very important. It's more important than sometimes the method. And companies will have all different sorts of methods. It's how they go about allocating costs. But once you set a method, you better be consistent. The accumulation of costs are under general ledger control. What that means is it can't be on a spreadsheet. You can't be trying to do accounting out of a shoebox. It has to be under general ledger control. It can't be several layers buried deep in a subledger of an accounting system. And you have to have a timekeeping system, as I said, that identifies labor to cost objective, which is the contract. The labor distribution system charges direct and indirect labor to the appropriate cost objective, monthly determination of contract costs. You can't wait till like randomly halfway through the year. You've got to be able to do this on a monthly basis. You have to exclude the unallowable costs that we've talked about. You have to identify costs by contract line item. Contract line item, one of the acronyms of the government would be CLIN, C-L-I-N, contract line item. And sometimes your contract will have a number of contract line items. Well, your accounting system better be able to follow things by contract line items. So if you have a multiple contract line item contract, you better set up several projects within your accounting system and track those individually, even on your timekeeping. System provides consistency for follow-on purchases or follow-on contracts. Something that comes to mind that is just sort of a random thought, but often you will have the opportunity to extend additional financing later. And what I found is that don't be too hasty to close out a contract. The government kind of allows you to keep those contracts open for a while. And an open contract is sort of like a freight car sitting there empty. And as long as the freight car is sitting there empty, you've got an open contract. If somebody comes along and decides to pour more money into it, then you can keep pushing that freight car on along. But if you get to the end of the contract and you send the notice that says, this is my final billing, then it's over. That contract is closed and that open train car goes away. So when you are doing accounting, you might want to leave like $5 unspent at the end of the contract so you can keep that handy. Now, that's not a trick I'm trying to pull against the federal government. The agencies will appreciate that they don't have to go through all of the work of setting that up again. So unless you're really sure that it's over, don't be too hasty to close that contract. What can you use for an accounting software package? QuickBooks Pro can work with a lot of spreadsheet work, and I repeat, a lot of spreadsheet work. I have some clients that I assist from time to time that are on QuickBooks, but it is a lot of spreadsheet work to make this happen in government accounting. Deltek is a major company. They have Cost Point 7 software for government contractors. They've been around for a long time. Microsoft has gotten into the act, and they had a product called Microsoft Dynamics NAV that is a project accounting package. They purchased a company, Navision, from Denmark, I think probably a decade ago, and it was an exceptionally well-written program for project accounting. And there's some folks in the Washington, D.C. area who have taken that and they've overlaid it with the requirements for government contracting. And they created this Microsoft Dynamics NAV for government contractors. And I have the license to this particular software. If you were to buy that software or the Deltek 7, you're talking $45,000, $50,000, or $60,000 for the use of that software with maybe an $8,000 or $10,000 annual subscription to pay. Well, you know, if you're a small company starting out, you're not going to be able to afford that. You're either going to be stuck in spreadsheet world, or you can work with Innovation Resources. I already have that program, and we have a number of companies offering software that can provide government accounting software that works with DCAA, and it's pretty well set up and it meets the regulations. At the end of your year, or actually 6 months after the end of the year, let's say that you're on a 12-month fiscal year that ends in December, you're required by June 30th of every year, if you have a cost plus fixed fee type contract, to submit an incurred cost proposal to the government. So what's going on here is that during the year, you really don't know what your indirect rates are going to be. You have an idea of what you think they're going to be. You have an idea how much you're going to spend on sales and marketing. You have an idea about this or that, but you really don't know. And the government has agreed to reimburse you for those actual costs. And you're not going to know what those actual costs were until the end of the year. So you start the year and you present them a proposed billing rates. And they generally review those, what your history are, and they'll negotiate a little bit, and they'll approve you for some billing rates. You use those billing rates throughout the year, and then you get to the end of the year, you have to close out the year, and you're going to see how close were your billing rates to what you actually did. And that's where the two sort of merge together in this final incurred cost proposal, where you propose your final actual cost with overheads and billings. They audit that, they review that, and then they get back and they say, okay, well, either you owe us some money because you overbilled us, or we owe you some money. Now, one of the pitfalls is that if you are in a spot where the government owes you money, but because your rates were actually higher than what you billed, you could be in a pretty tight spot there because the government may not actually have funding available to make up that difference, okay? And if the contract is done, then you could be waiting a while before funding comes. And they would be obligated to pay, but you're waiting for a long time to catch that up. On the other hand, if it turns out that they audit you and you owe them, they're not going to wait very long for that, okay?
Funding isn't available at this time.
Yes, same phrase. Well, one of the pitfalls then is this sort of area of where are your actuals compared to your billing? And what I do in my government accounting is to really put a lot of effort into, as the year goes along, to keep track of where you are relative to billing to actual, so that you don't get to the end and either owe the government or the government owes you.
David?
Yes.
What is DCAA doing to get less behind? I've heard rumors that they're going to start chugging away, and they're going to, because right now they're 3 to 5 years behind on ICEs.
Yeah. The question is, what is the government going to do to get less further behind? I don't have an official answer on that, but I suspect because there's such a slowdown in government spending and government contracting, that some of that's just going to work itself out going forward. And it's unfortunate that that's my answer, because it's not the answer that we want to hear, is that there's less government funding.